Hey, it's Soleil, and this is episode 236 of the Orange Pill Investor. And every day is roll day, depending on what the stock is doing. And sometimes people kind of root for the stock to go under their strike. I never do that. I always want the stock to just go up forever. And if my shares have to get called away, that's just fine. Um, Case in point, my main account is down like 30% today from yesterday, even though MicroStrategy is only down 6%. So I would be more than happy for MSTR to just blow right past 170, 177.50, just go to 200, get it over with, because these long calls are going to appreciate faster. But what this does is it means that I should probably make a decision on what to do with these calls because I sold them on Friday for $700 a pop, and it's only Tuesday. So, by Wednesday, by half of the trading days, if it's worth less than half of the trade price, then you're kind of ahead of the game, and there's no reason for me to hold on to this and try to collect the other $100 for Tuesday, Wednesday, Thursday, Friday. I've already collected 600 of the $750 in 2 trading days because MicroStrategy is down. So I have to decide, do I just want to close these and then reopen positions with a lower strike and collect more premium, or just close them period and then wait for the stock to go back up. I guess technically that's called bag holding. But my trade price for MSTR is now 142. So I can sell covered calls anywhere above 142 and still be guaranteed to make a profit. But yeah, so I can either roll these, close them and open a new lower strike, collect more premium. I can just close it and wait for the stock to come back up, or I can just let these ride and collect the other 1/6, 1/7 of the premium. I decided that I didn't want to do that, and I had been selling covered calls close to at the money like 4 weeks in a row and getting wrecked. So I'm gonna take this opportunity to go ahead and just profit on these. Sold them for 750. Gonna buy them back for a little over $100. And if I can get a fill, see if I can get a fill at 115. There we go. So that only took about $1,000 worth of buying power. And so now I think what I want to do, and it always seems like whatever you do, that just jinxes the market to cause you the most pain and just fuck you. So what I wanted to do was to continue to sell the covered calls after up, moves up, and then not sell them until the price moves up again. So what I think I want to do is completely just jinx the market, and I'm going to leave these uncovered until the price spikes 10, 20, maybe, the next pump is going to do another 50%, like when it went from $50 a share to 75 a share in like a week. I think I'm going to wait for a nice big spike to make sure that I capture all of the upside. I still do have these 11 covered calls on the other half of the shares. And of course, I have a bunch of these long calls. And I am not necessarily in a hurry to add to these positions, even though I sold some for like 7 right here. No, sorry, that's my covered calls. I sold, yeah, 10 of them for like 720. And I sold 20 for 70. Yeah, so I sold 30 at 700. 700 bucks a contract. I sold 20 of them at 5. So I could buy back a couple of these a little cheaper, or maybe even just add one more of these bad boys. Or let's see what else we got. I think there's some new, not necessarily new. Um, but I don't know that I want to go out here because this is under 180 days, which means I only have, I like to unload these by 90 days to expiration. So I only have 54 days left on these to make a decision on. So I think I'd like to go at least out past 180 days again. And if I bought these Aprils, then I would manage them at least by January. So let's just look. They do have $350 strikes. So that's pretty reasonable. Let's see what the June ones go up to. 350 as well. Those will cost a little bit more. So let's just take a little nibble here. Let's just buy one. I don't want to go crazy. Let's see if I can talk myself out of doing this. I have to unload positions in MicroStrategy before 11/6. Because TastyTrade is going to change their margin requirements. So this 50 grand worth of buying power here is going to just evaporate. And I could go and find out how much and do the calculation. But I think last time I had 70 and it dropped to 20. So this could get ugly. So I do have to drop some more positions by 11/6. Yeah. Okay. I did talk myself out of it. I am not adding positions. If we get a more significant buying opportunity, then I'll be more motivated to get in there. But I don't have to run in. Is this even really a dip? Like dropping from 170 to 160 is like, eh. All right. So, oh, and really, I'm just wishing I sold more, more of these when the price was higher. I thought I was getting aggressive selling 70 of my 80 uh, long calls. But yeah, I'm still leveraged pretty heavily. So I have to watch that pretty close. I had been selling off a bunch of my Tesla positions in order to buy more MSTR. But if I was holding more Tesla, that would probably look better for the algorithm. But yeah, I'll just stand pat for right there. Now the 5K account, I should probably do something similar because the CLSK 11.5 strike is only worth $2. I collected 90% of it. I collected 18 of the $20. No, average credit is 19. 17 of the 19. I've already been collected. So let's see if I can buy this back for 2. Nope, they're gonna want the whole $3. All right, let's replace it. Oh, now the bid ask spread is to 2. Okay, now it fills. All right, let's view all options and see if I want to roll this down to something and collect a little bit more premium for this week. See, I just got screwed on the bid-ask spread. So I kind of don't want to get back in here at 9.5. And really, I might have to go down to 8 to get a fill. And then on Friday, got to buy it back for another buck. So this could totally whipsaw. And, if CLSK goes back up to like 950 or 10, I could get screwed on this. But this makes the most sense to me just because of the friction to trade in and out of these positions. It almost, if this was any, if I had at least $5 left in that option, I probably wouldn't have done this. Just let it sit there for another couple days and collect the last $5. But you got to collect something to make getting in and out of the trade even worth it. So taking a bit of a risk here. If the price reverses by Friday and goes up, then, I'll lose money on this trade. But it is not the end of the world. Robinhood is hilarious with this buying power. I guess I'm only using $390 of margin. I actually like that very much. I was heavily margined in this 5K account too. So the fact that my account is back up and using very little margin, I like. So if we get a nice dip, I'll be able to take advantage of those buying opportunities. But for now, I will stand pat. So, no sense in just waiting 4 more trading days to collect $2. So now I'm going to get paid 20 for the rest of the week. I only have like 40, 50 cents worth of 40 cents worth of callaway value here. So, might be cutting myself off at the knees on CLSK. But the other covered call I have is at the $12 strike, and that one was out to 45 days to expiration. So got both of those strategies running. I got the weekly, and I've got the weekly that's closer to at the money, which makes the most sense for the theta decay curve for weeklies is maximally has maximum acceleration near at the money, so that kind of makes sense for this one anyway. And then for the longer duration expirations out to 45 days, the theta decay curve is maximized at out of the money options, not at the money. So both of these are actually optimized. The strikes and the days to expiration are optimized for each other. So happy with that. I think that's it for now. Hopefully these moves will pay off. And but if the market wants to inflict maximum pain, then we'll see 58K Bitcoin again. MicroStrategy will be down to 140, 120, whatever, and I'll just be bag holding and pissed off. All right, that's it for now. Be good, Joe.